Congratulations! You found the Pirls Stock Market Commentary for market week ending Friday, January 30th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.84 to 0.79, declining further into bearish territory. The total count of securities in bullish or bearish patterns fell 2% to 2,531. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns decreased 5%. The Pirls PNF Market Breadth Summary Chart shows us a market now 4 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 59 points for the 10th decline in 15 weeks. At a negative 210.75 points, it continues below all 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. The CCI 20 daily in a Woody's uptrend is now within the plus or minus 50 range for a valid zero-line reject entry signal. The last tick Friday was upward, but at a lower angle than the prior tick, down, so we wait for a more decisive upward move. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 29 weeks ago, while the daily CCI 20 began a Woody's downtrend 2 weeks ago. The CCI 20 weekly has declined from last week's zero-line reject long entry signal, but not below the zero-line reject pivot point of 26.73, so we stay in the trade. We will continue following the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. 3 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, oil services continues in the bottom 5. Banks and semis have left the bottom 5. Bearish, disk drives, and brokers continue in the bottom 5. Gold and silver continues in the top 5. Oil has entered the top 5. REITs has left the top 5. Focus this week from King World News. Billionaire Eric Sprott, entities wiped out overnight as Western central banks near total surrender. A few points from the article. As entities are being wiped out overnight, Western central banks are nearing the point of total surrender. The most volatile asset class these days is currencies. Currency wars continue to rage with various governments and central banks. You have to wonder to yourself, how are these banks positioned in these derivatives? We see this huge volatility in currencies, and a lot of it must be by way of derivatives. Well, this was the problem with the foreign exchange companies that were wiped out overnight. Now there is fear breaking out in Europe surrounding the stability of the euro and the banking system, especially in light of the fact that the Greeks may default. This is causing people to move into physical gold. It's also kind of wild that the type of trading we see in China on a weekly basis is way bigger than the entire dealer inventory on the COMEX. You wonder how long can these guys, the Western central banks, keep this up, the price suppression scheme. The physical demand just won't let up at these depressed prices, and when you throw in a massive currency war that is taking place on a global basis, it is only making matters worse for the Western central banks. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, and this afternoon, may the best team win, and more significantly, may your real lives be more exciting and satisfying than the fantasy world you encounter while watching television. Hoping that you have a fabulous week coming up, and as always, wishing you true success.